you worked for cash this year and you have children in your household or some other dependents, you may be entitled to some money from the IRS. More details right away. This week I had a situation when a client having 4 children in their household qualified for a very small amount of a tax refund from the IRS. The reason, a very small income. I was having a really hard time trying to explain to them that a low income would trigger a small refund. When you achieve a certain threshold of income, your refund starts growing. This is how the taxes in America work. If you worked as a self-employed, made some money, and you are writing off absolutely everything, trying to turn your earnings into zero, being sure you're making the right job because you will pay zero in taxes, but it appears to be not that smart, especially if you have children. If you want to receive an earned income tax credit, you need to have an earned income. If your income is zero, you become not eligible for it. If your income is very little, you will not get the full amount of the earned income tax credit. The government's concept is if you want help, give it a try, make some money, and you will receive some free money from the state. If you are showing no income, the government's concept is oh, this person is not even trying. We will not support this kind of attitude. Just earn, report at least $15,000, and the government will support you, offering you free money in the form of some tax credits. Let's look at some examples. Let's assume you are single, you are an independent contractor or a freelancer, and you have a child. In this situation, you qualify for the earned income tax credit. Besides that, you will receive an additional child tax credit because you have a child. Let's see how it works. Let's say your net income after all the write-offs turned to be that much. Your self-employment tax is that much. Since your income is low and you have a child, you will qualify for the earned income tax credit and the additional child tax credit. They are both refundable and they exceed the taxes you owe to the IRS. It means if you report your earnings from self-employment, you will have to pay taxes. But the good news is that the refundable credits you will receive from the IRS are much more than the tax you owe. This amount is your tax and this amount is your refund. The difference between them will go to your pocket. Melissa is a freelance designer. She works from home and she has a child. In 2022, she made that much as a gross income. After she had written off her expenses, she arrived at a net income of that much. Her self-employment tax appeared to be this much, but her earned income credit and the child tax credit together are this much. As a result, she will receive a refund of this much. As you see, reporting your cash income makes sense. You are much more better off reporting your income rather than hiding it because you don't want to forfeit your refund. I created this table for you to be ready to do some simple financial planning for your family and to be aware how much in self-employment tax you will have to pay depending on your filing status and your income. Let's assume you are single and you have one child, and your net income after all the deductions constituted that much. Based on this amount, your self-employment tax would be that much, and the child tax credit, since you have a child, and your earned income credit together would be that much. The difference between these amounts will go back to you as a refund. Now let's assume you are a family and you're filing your taxes together with your spouse. You're both self-employed and your net income after all the deductions constituted that much. And you have two children. Your self-employment tax would be that much, and the refund that much. The difference between these two amounts, which is considerable, around $6,000, will go back to you as a refund. Please remember that you need to keep your profit and loss statements and your bank statements in case you will have to prove your source of income. So the conclusion is the following. If you are in a situation when you have children and you have no income at all, just try to make some money and you will qualify for the tax credit you definitely deserve. Your income is low. Your tax return is a document that will help you to easily apply to such benefits as food stamps, health insurance, free of charge college, and so on. Besides that, filing your taxes and reporting your income, you will contribute to your future retirement benefits. That's a very important thing to think over. This week I had some clients, they are retired and their income didn't meet the filing requirements. Simply speaking, they were not required to file their taxes, but they insisted that I file their taxes for them. They paid the tax preparation fee because, as they mentioned, they wanted to have a peace of mind knowing that their social security numbers are intact and their personal information was not used in a fraudulent way with the IRS. That's all I wanted to share with you today. Thank you for your time. Take care and enjoy your day. And I'll see you in my next videos. Bye.